Welcome to the YouTube channel for Grap coins. This is a Doge update video. As indicated by the Doge chart, the price continues to decline. I believe I stated yesterday that the fourth wave of this C wave decline, represented by a triangle pattern, may have concluded. We will examine the 1-hour chart in greater detail shortly, as it did, in fact, exhibit a strong correlation with a triangle pattern which has been analyzed previously. As triangles undergo frequent transformations and shifts, I maintain a vigilant approach, cognizant of the fact that these structures, namely corrective structures, constantly advance. Simply put, it is essential to recognize when trends change and to concentrate on levels as opposed to counts, especially at the micro level, where we are essentially at our desired destination. The price ought to be within the zone of support. The price entered that support area twice, on April 13th and March 20th respectively. That support region, which has remained unchanged since, say, the middle of March, has elicited several responses. Since its inception, this orange support region has remained on the chart and demonstrated remarkable consistency. To date, neither the microstructure nor the support area have undergone any alterations. As I mentioned in a previous update, this is most likely a flat structure formed by a three-wave, a wave that reached its lowest point on March 20th. The C wave collapse, which occurred after a B wave corrective rally to its peak on March 29th, seems to consist of 5 waves concluding with a diagonal. Although it appears to be a WXY pattern, it is in fact overshooting. This method can be used to count the X wave, as its accuracy is always dubious. Assuming an ABC configuration, the C wave represents the ultimate diagonal. In total, there are 5 phases. We currently have 1, 2, and 3, so this could be the 4th. Presumably, we are presently engaged in wave 5. Commence by examining the 1-hour chart. It is imperative to bear in mind the proper support levels. We have support down to 11 cents until we observe an initial reaction to the upside and a first modest upward impulse. There is obviously no bottom in place, therefore we must monitor these pivots, critical support levels or Fibonacci levels, and determine whether the price falls below 12 or not. In this structure, the 11-cent level continues to be a valid support level. However, one more low would be optimal and should be sufficient. Support is essentially what they offer. The fourth wave exhibited a triangular pattern consisting of higher lows and lower highs, as is evident. Furthermore, an examination of the wave count revealed that a sufficient number of waves were present to classify this object as a triangle. Even if we were to contend that this was the E wave and that was the D wave, the distinction would be negligible. In all honesty, I am a little perplexed by this. Now that we have broken below the 13.6-cent mark, we may be on the 5th wave to the downside as opposed to the April 13th low. However, this would be ideal because it would indicate that we have sufficient waves in place to declare this decline complete. In addition, the smallest level contains 5 waves, so a slight decrease is acceptable. This is the U wave and the D wave, but in all honesty, it makes little difference. We won't know for certain either way. It seems that the 12-cent level could serve as a substantial confluence Fibonacci support. I must warn that if the 12-cent level fails to provide adequate support, the situation on the Doge chart will become considerably less certain and transparent below 11 cents. Although the 5th phase is not unexpected, it is evident that further observation is required. Should you find this update to be satisfactory, kindly click the like button. As an early indicator that a low has formed, I am intrigued to see how the market reacts to these pivots and whether it will surpass the most recent swing high of 14.6 cents. Quite simply, I appreciate you watching Grap Coin. Kindly become a subscriber and leave a comment.